The Indian markets have been volatile for this week. There is a negative bias in the Indian markets. This is primarily caused by the NBFC sector. DHFL primarily has been a default, and the credit rating agencies have also downgraded DHFL. There are growth concerns in the Indian markets. Q4 has gone down. The Q4 growth has gone down to about 5.8%, as well as the unemployment rate is going high. The RBI rate cut of about 25 basis points and the accommodative stance didn't held the market after touching a high of about 12,103 odd levels. It started correcting. It's not been able to hold that. It's gone down to about 11,829 odd levels, while closed at 11,843 odd levels. It was down for this entire week by about 0.86%. The sectors did well in the market have been IT and consumption, which was up by about 0.9%, while PSU banks were down by about 4.9% and media was down by about 4.1%. In terms of technicals, Nifty has formed a bearish candlestick pattern on the daily as well as weekly charts. RSI has gone down to about 63 odd levels, while it's still trading positive. MACD is still trading above the signal line. However, we are tentative on the Indian markets. We do expect volatility in the Indian markets, primarily on account of the growing concerns on the NBFC sector. The mutual fund woes that may come across because of the NBFC sector. Mutual fund has significant amount of exposure, and the debt funds are looking tentative around that. We expect more downgrades. DHFL and EROS have defaulted, and the growth concerns are growing in for the Indian markets. While these are the negatives, the support that can come from is the rate cut that has been signaled by RBI. Crude is going downwards globally, as well as there is enough amount of liquidity in the Indian markets, in the banking sector. So this matters support. We would request you to trade with a strict stop loss in the Indian markets going forward. The markets are expected to be volatile. You book the profits on every rise and be stock selective. The upside resistance is seen at about 12,000 odd levels now, and the support is seen at about 11,704 odd levels. So that's our outlook for the market. In terms of our stock recommendations, we have a buy recommendation of Power Finance Corporation, which is moving upwards for the past 4 consecutive weeks. We have a target price of about 140 odd levels with a stop loss at about 124 odd levels, signaling upside of about 6%. This stock has moved significantly upwards. It has formed strong bullish candlestick patterns. RSI is up to about 69 odd levels, and MACD is also trading above the signal line. The other stock recommendation is Coal India. We have a buy recommendation with the target price about 280 odd levels, with the stop loss at over 255 odd levels. Again, signaling an upside about 4%. This has given a strong breakout, moving upwards of about 200-day moving average, and the swing high also it is crossed across. It is from this bullish candlestick pattern. The RSI is upwards about 63 odd levels, so there's a strong support for this, strong movement for this particular stock. The next stock that we have is Aurobindo Pharma. We have a sell recommendation on the stock. A target price of about 605 odd levels with a stop loss at about 645 odd levels, signaling a gain of about 3%. This stock has been down for about 6 consecutive weeks. There is a bearish candlestick pattern formed on the daily as well as weekly charts, and the RSI is also trading downwards to about 33 odd levels. So that's our recommendation for this week. Thank you.